Welcome back to Investing Talk Podcast. Today we're zeroing in on Xpeng's upcoming Q2 2025 earnings report. Now, this isn't just another number drop. It's really a crucial checkpoint for anyone tracking the shifting landscape of electric vehicles. Our mission today, to arm you with the sharpest insights from the pre-earnings analysis we've looked at so you understand exactly what to look for and, well, what it all means. We're here to help you cut through the noise and give you the signal, not that overwhelming flood of information you sometimes get. Before we jump in, just a quick ask. If you find value in our discussions, please consider subscribing, liking, leaving us a comment. It really does help us immensely. And hey, if there's a specific company you'd like us to look into for a future discussion, just drop it in the comments below. Okay, let's begin piecing together this high-stakes puzzle.
Exactly. And our aim is really just to distill the core info, helping you stay well informed without getting buried in data. We're not here trying to predict the future or anything, but really just to get a handle on the landscape as we head into this critical report based purely on the data we have.
Okay, so let's start by laying out the basics, the timing and what people are expecting. For Xpeng's Q2 2025 earnings, we've got a date and time locked in. The report itself is scheduled for August 19th, 2025. That's set to drop before the U.S. market opens. And then the earnings call, that's where leadership talks results. That's scheduled for 8:00 a.m. Eastern Time. So that's when we'll hear directly from them. With that date getting closer, what are the initial whispers? What numbers are analysts actually forecasting?
Well, what's really fascinating here, actually, is that the company itself already adjusted its Q2 revenue guidance upwards. They're now projecting roughly $2.4 to $2.6 billion. Now, that's a pretty significant bump, notably higher than the prior consensus, which was sitting closer to maybe $2.3 billion. So Xpeng has essentially raised its own bar heading into this report. That says something about their internal confidence, perhaps.
Yeah, that is quite a confident move, raising their own target like that, especially, in this market.
It certainly is. Now, on the other side of the coin, the consensus for earnings per share, the EPS, well, various trackers still show an expected loss. One forecast, for example, puts it around negative $1.06. It's really important to remember, though, that EPS is profit or loss per share, and different analysts calculate this differently, different methodologies. So while that number gives you a ballpark idea, you should take that specific figure with maybe a grain of salt. What's also kind of interesting is that there isn't a widely published whisper number from the major aggregators.
Ah, the whisper number. Explain that quickly.
Right. So that's like an unofficial sort of street estimate that circulates among traders. It often reflects what, insiders or savvy investors think the company will actually report, which might be different from the official consensus. Its absence here means the market isn't really strongly leaning towards one particular unofficial expectation. Adds a bit of uncertainty, really.
Okay, that's a key detail. Less of a strong unofficial read going into this. But how often does Xpeng actually, deliver on that kind of confidence? Let's just quickly look back. Have they surprised us before, or do they usually land where analysts expect?
Oh, they've definitely shown they can surprise the market. And sometimes, quite dramatically. Take the last reported quarter, back on May 21, 2025. Xpeng reported an EPS loss of just negative $0.10. Now, put that in perspective. This was a huge beat compared to consensus estimates. Some trackers had them losing much more, like managed $1.31 to negative $1.51.
Wow, wait, so from like minus $1.40 expected to minus $0.10 reported, that's massive.
Exactly. They basically narrowed their expected loss by, over 90% at the midpoint? That's not just beating consensus, it's kind of blowing it out of the water. And that immediately raises the big question for this quarter, for Q2. Can they possibly repeat that kind of momentum?
It's a powerful point. A beat that big suggests something fundamental must have shifted, right? Or improved. Any idea what drove that? Was it like a strategy change, better sales, or maybe they just got costs under control?
Yeah, well, our sources don't give us the exact why behind that beat, but the fact it was such a, material improvement in the EPS loss strongly suggests something clicked operationally. Could be better cost management, maybe a more favorable sales mix than anyone expected. And crucially, right after that strong Q1, management then proactively raised their Q2 revenue guidance, the numbers we just talked about. That signals they saw strong deliveries, continued revenue momentum building into Q2. They were basically carrying that positive trend forward. One important caveat, though, our sources don't really give us a consistent audited look at how the stock price reacted immediately after past reports. So we know they surprised the analysts, but we can't say for sure how quickly or strongly the market priced that surprise in terms of the immediate stock move.
Gotcha. Yeah, that immediate reaction data is often tricky. But still, the momentum implied from that huge beat and then the raised guidance. It definitely adds a compelling layer here. But to really understand what's shaping these Q2 expectations, we need to look, under the hood. Examine the recent operational stuff and market currents. What significant news or trends during the quarter might have played into these expectations for Q2?
Well, during the quarter, the most notable news operationally was, honestly, pretty simple. The company just confirmed its Q2 reporting date and reiterated the timing. Now, that might sound minor, but in a dynamic industry like EVs, it kind of subtly suggests that their operations stayed mostly on track. No big unexpected hiccups delaying things. And like we said, this reconfirmation came after their earlier update, which included that higher Q2 revenue guidance.
Oh, okay, so it's almost like a quiet signal of confidence. Like, yep, we're on schedule, things are proceeding as planned, even in a tough environment.
Precisely. Now, connecting that to the bigger picture, while our sources don't give us explicit sector-wide numbers like overall EV sales trends in China or globally, Xpeng's decision to guide above the prior consensus implies they anticipated stronger demand or maybe a better sales mix for their own cars. And this is pretty interesting given the broader EV industry has often faced, headwinds from intense price competition.
Right, everyone seems to be cutting prices.
Exactly. So if you think about it, Xpeng's higher guidance suggests they might be navigating those competitive pressures maybe a bit more effectively, perhaps through product differentiation, maybe brand strength, or just being more efficient. As for recent analyst takes, MarketBeat did track that Q2 guidance update, acknowledging the company's raised outlook. But the sources we have don't really detail any specific analyst upgrades or downgrades during the quarter itself, so we're mostly relying on the company's own signaling and the general consensus rather than shifts from individual firms.
That's a useful distinction. The company's own compass seems to be pointing more positively than maybe some expected, even if analysts aren't making huge moves yet. But while we're talking about what we do know, it's just as important, maybe even more so, to acknowledge the known unknowns. What crucial pieces are missing from this analysis? And why does that matter, especially for listeners thinking about, market positions?
Yeah, this is a critical point because our sources do have some pretty significant data gaps, especially around the stock's technical setup and stuff related to implied volatility in the options market. First, we lack specific data on the pre-earnings price action. So we don't have a detailed picture of how Xpeng stock actually performed in the days or weeks right before this August 19th report. Was it rallying into earnings? Was it just sitting there? Or maybe pulling back? Without that, it's harder to gauge the market's mood leading in.
So we don't know if the market was already kind of pricing in good news or if there's still a lot of potential for a surprise.
Exactly right. And maybe even more significantly, we don't have the call and put options ratio. This is usually a really key indicator for sentiment. It shows the ratio of call options bets the stock goes up versus put options bets it goes down. A high call put ratio might suggest bullishness, a low one bearishness. Without it, we're kind of missing a key pulse on how traders are actually positioning themselves. And finally, there are no specific implied move percentages provided. This ties into implied volatility.
Right, the IV.
Yeah, the IV. It basically represents the market's expectation of how much a stock's price will swing after something like earnings. Options prices reflect this. Higher FI means options cost more because the market expects a bigger move. So without these implied move percentages, we just don't have the options market's own forecast for how much Xpeng's start price might swing after they report.
That feels like a pretty big blind spot, doesn't it? Flying blind on how much the market even expects the stock to move.
It is, yeah. These limitations together mean it's significantly harder for us to gauge market positioning and, crucially, the potential for a really volatile post-earnings price move. Without that options market forecast for volatility, any trading strategy relying on that info is operating with, reduced visibility. It's just a stark reminder that no single analysis covers everything, and these missing pieces definitely limit our ability to predict the very short-term price action or the immediate market reaction.
Absolutely. It's like having a puzzle with some key middle pieces just gone. You see the edges, the main picture, but the full scope, the volatility potential isn't quite clear yet. So knowing what we do know and acknowledging these important unknowns, what happens next? What are the potential scenarios when Xpeng actually drops that report on August 19th? Let's look at both the optimistic side and the more cautious view.
Right. Okay, so for the bullish case, what we'd want to see is Xpeng's revenue landing at, or ideally above, the high end of their own guidance, so potentially $2.6 billion or even better. But beyond just that top-line number, a really strong bullish scenario would show sequential improvement in their gross margin. That means they're making more profit on each car sold. And alongside that, tightly controlled operating expenses. That combination shows operating leverage getting more efficient as they scale up. This would also likely mean their EPS loss narrows even more compared to that tracker consensus, reinforcing that amazing prior beat and signaling, sustained progress on margins and scale. And critically, a bullish report needs strong forward guidance, indicating continued revenue momentum into Q3, maybe stable pricing, maybe a better mix of higher margin cars being delivered, all supporting a clearer path towards breaking even or profitability.
Okay, that's the upside. What about the flip side, the less rosy picture?
Okay, the bearish case. That would look quite different, obviously. We'd see revenue coming in near or maybe even below the low end of their guidance, so maybe around $2.4 billion. This scenario would probably come with evidence of margin compression, maybe because of those pricing pressures across the EV market finally hitting them harder, or maybe Xpeng itself had to do more promotions to sell cars. That would likely cause their EPS to miss those tracker expectations, and really critically, softer forward guidance would be a major red flag, either on delivery or revenue. That would point to maybe demand normalizing or competition getting tougher, and it would raise real concerns about whether their recent improvements are sustainable. Now, the key metric to watch through all of this, probably above everything else, is that gross margin trajectory and the forward revenue delivery guidance. Those two things will be absolutely crucial in telling us whether Q2's top-line strength actually translates into real margin improvement and continued operational progress. That's where it gets really interesting. Is this momentum real and lasting or just a blip?
That's a fantastic breakdown. Really highlights gross margin and forward guidance. Puts a fine point on what truly matters beyond just the headline beat or miss. So pulling it all together, what's our overall sort of leaning heading into these earnings based on the info we have? And what might that mean for you, the listener, thinking about your own approach?
Yeah, based on everything we've discussed, the analysis points towards a pretty neutral stance heading into these earnings. Look, management did set a constructive bar with that higher Q2 revenue guidance. That's definitely a positive signal. But the fact that we're missing that current options data, those crucial implied volatility figures, and a clear picture of the pre-earnings price action, it means our visibility into whether a positive surprise actually translates into a durable post-earnings stock gain is, well, moderate. So on our confidence scale, maybe 1 to 10, for predicting the market reaction, we'd probably put it at a 5 out of 10. And this neutrality isn't just, sitting on the fence. It actually highlights that even with Xpeng showing internal optimism, the market's collective signals are unusually murky right now. It underscores the high stakes and the, frankly, unpredictable climate, even for a rising EV player.
A 5 out of 10. Okay, so basically it's a bit of a coin toss based on the available signals. What about trading strategies then?
Right. So for trading strategy considerations, for those of you who actively manage positions, let's think about two types of approaches. For the more risk-averse listener, it might be wise just to wait. Wait for the actual report and that forward guidance on August 19th. Then you can react based on the actual data, the gross margin, the forward outlook, trading on concrete info, not speculation. Alternatively, if you're thinking about options after the earnings are out, post-print, maybe something like a call spread could be considered if the guidance and margins look strong.
Explain a call spread quickly.
Sure. It involves buying one call option and selling another call option at a higher strike price, but with the same expiration. It caps your potential profit, but also caps your initial cost, defining your risk. It could make sense here, given the uncertainty about IV beforehand. Now, for the more risk-tolerant listener, if your current positioning is light and you're actually anticipating a beat and raise, they beat Q2 estimates and raise future guidance, driven by good margins and progress. Well, then, a directional call spread into earnings might be something to consider. You're making a calculated bet on direction, but again, with the defined risk that caps how much you spend up front. However, what if you're unsure about direction, but you strongly expect a big move, up or down? Then a market-neutral strategy might be an option. Things like a straddle, buying both a call and a put at the same strike, or a strangle similar, but using out-of-the-money options, which is cheaper but needs a bigger move. But, and this is a huge but, remember that missing implied volatility context from our sources, it is absolutely critical you check real-time IV data before putting on any strategy like that. You need to know what kind of move the market is already pricing in so you don't overpay.
Excellent points, especially that IV warning. Very important. So wrapping this up, what does this all mean for you, our listener? It means approaching Xpeng's earnings with hopefully a clear understanding of the knowns, the unknowns, and those really crucial indicators, gross margin, forward guidance that will truly signal the company's direction. It's not just about the Q2 numbers themselves, but how that report frames their path forward in this really challenging but also rapidly evolving EV market. And here's a final thought to chew on. As you digest this, consider how Xpeng's gross margin trajectory could potentially signal more than just its own profitability. Could it hint at broader trends or shifts in pricing power across the entire electric vehicle sector? That's a big picture question worth mulling over. We really encourage you to continue your own exploration of these fascinating topics. Thanks so much for joining us on Investing Talk podcast.